Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the non-commercials in the market are doing, which are the big players in the market, so essentially hedge funds. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. In fact, from here, all these previous rejections to the upside have been created. So every time that the market was testing this area, it was reacting to the zone and creating rejections to the upside. And on only one time, the market actually broke below the level, but immediately turned out to be a false breakout because the market broke below, then broke back above, went for the retest, and again respected it as support. So the last time that the market tested the area, again, it respected it as support. And at the moment, we are once again testing the area. The market is precisely inside of the zone as we're speaking, so there is a good probability to see yet another rejection to the upside away from this historical support. That is definitely possible. Now, let's keep this in mind and drop a little bit more in the most recent price action. Now, what we can notice here, if we look at the most recent price action, is that the market has just created a massive impulse to the downside and now just started a correction. Now, usually after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how the market hasn't even yet retraced to the 0.32 of the Fibonacci taken on the impulse leg, which essentially would be the first retracement level after such a strong impulse. So there is definitely the possibility to see a bit more bullish price action for the market to go and reach this area. So here on the monthly, everything is pointing for a bit more bullish price action away from this level. Now, dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, the situation is very clear. We can notice how we had a market which was in a bearish trend, so creating lower lows and lower highs. Then the market printed this double bottom and now seems to be ready to shift from the creation of lower lows and lower highs to the creation of higher highs and higher lows. So there is definitely a possibility from here to see more bullish price action being created as the market has just printed here this double bottom at this area. We can also notice that we did have some resistance around this zone. From here, this previous rejection to the downside was created. The market again tested the level, is currently starting to reject it to the downside. Now, if the market will manage to break above this resistance, at that point, this previous resistance would become support. So at that point, there would be definitely a possibility of seeing more bullish price action. But for now, we haven't yet seen that breakout. We simply have a double bottom. So we have to keep that in mind and drop down on the daily time frame. Now, from a daily perspective, this is where, in fact, we do see a break of structure. Now, I have spoken about EURUSD just a few days ago when the market was around this area and explained all the reasons for which I was expecting this rejection to the upside, which is, in fact, exactly what the market did. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. But since then, the market first created some structure at this zone. So when the market from here created this push to the downside, essentially it created a high, so a previous level of resistance and structure, which after the market broke it to the upside became support. Because what we know in the market is that if we have a level of resistance and the market is respecting that level of resistance. So when the market is testing the zone, it's rejecting it to the downside, and then the market breaks above that zone. What we know is that all the sellers that were looking to sell at this level at that point, since now buyers are in control, when the market goes for the retest of the zone, are actually buying. That is why in the market, previous resistance, once it is broken to the upside, it usually becomes support. And in fact, that is exactly what the market is currently testing. The market is currently, after having respected this level as resistance, it has broken it to the upside, is currently retesting it, and there is a good probability of seeing the market respect this level as support and demand. So here in the daily, everything is quite clear. Now, before we dig into more detail into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on the euro. Now, the first thing to keep in mind is that if we're looking at the data for the euro, we're actually already looking at euro USD, because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, we went from having minus 75.5k net positions all the way up to minus 64.4k net positions. So clearly, there has been an increase of the net positioning, moving back to the bullish side for the euro, therefore to the bullish side for euro USD. Now, we still don't have the new data for this week, but there's an increased probability with the new report coming out Friday that there will be more institutional longing, which has happened this week, because already institutions have increased their longs from 153k to 165k, and shorts in long term are getting decreased from 232k to 230k. So there is definitely a possibility to see more institutional longing of euro USD, since that trend seems to be already started. Now let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, we have a market which is testing strong daily support and demand, and at the same time we have an impulse and correction. So again, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, and if we do that, we can see how we have the 0.32 and 50% retracements lining up exactly with that previous resistance turn support, therefore creating confluence of support at this level. And since we have confluence of support, there is an increased probability of seeing a potential rejection to the upside away from this area, completing this daily impulse correction, impulse pattern to the upside. That is definitely a possibility. So in a situation like this, how would I approach it? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, fueled by that institutional longing, which has already started. That definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the quant analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show, so essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my a WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.